Hey guys, welcome back. Yassine here again. As you see in the title of this video, I will try to show you and share with you ways how to sell a stock. I had problems before, long ago, years ago, and I had no idea. So I put in my emotions. I didn't know where to sell the stock, and the main things that you have to have, as the same way you have buying rules, you need to have selling rules. Let's jump right into it. Easy answer. You see this moving average right in here, 50, 21, and 8 moving average. If you plug in those in your chart, and if you can, for me, as far as I'm concerned, when I was a beginner, and through trial and error, like I found those ways, like they when I plug them in, they got me out of the equation of putting my emotions on when to sell. Because once you get into starting talking to your head and what I'm gonna sell, is it too far? Is it extended? Is it overbought? You're just gonna be lost and you're gonna be in a jungle and there's no way out. So plug these moving averages. So we have the 8 exponential moving average, we have the 21 exponential moving average, and I had the 50 moving average. You can split your position into three parts. So as soon as the stock from the buying point breaks and close and violates on the daily. I'm talking about daily. So we're talking about swing trading. I'm a swing trader. I'm not a day trader. You can use them if you want on a day trading. I mean, it's up to you. But I'm just giving you my opinion and what it works for me, and it's still working for me. So I'm a swing trader. I'm a buyer and breakout. Sometimes I buy at a cheat point right before it breaks out. So I cannot tell you how important the buying point, because sometimes if you get cut on a stock and it's extended and you're buying it way up here, I mean, you're gonna get. I mean, this moving average is gonna help you, and then they will give you a straight answer. But it's really good. Which, I mean, again, it takes a lot of practice too, and you need to put in the work. So I'll keep saying it over and over and over. So you need to really, if you don't have a good strong buying point, you're gonna be lost, man. So again, once one of these moving averages get violated, what does that mean? That means we have a closing day below these moving averages. Sell one third of your position. You can sell half, or you can sell actually. So let's say, if you do 50%, let's say you have 100 shares on a position, you can do the 21 and you can do the 50. If you have, so that means once you buy at a good point, a good breakout point, once of these moving averages get violated, means that, I mean, the candlestick closed below the 21 moving average, you sell the first half, and then once the candlestick closed below the 50 moving average, you sell the second half. If you have if you decided, there's no right or wrong. If you want to do one third, you can do it any way you want. We can't argue about that. Like, in the same way there's like thousands of ways how to make money in the stock. That means that breakout, it's not the only way how to make money in stocks. There's thousands of ways how to make money in stock, and I'm just giving you what works for me, and I'm trying to help you and get your emotions and ego out of the equation. So when you see a stock, you look at it, 1 + 1 is 2. Stock violet close or below one of these moving averages, you sell something. That's it. Same way you should have, and you must have buying rule, you need to have a selling rule. It's that simple, no fluff on it. So I'm gonna try to give you some scenarios, some examples on real stocks. So we're gonna go through some scenarios. I did actually pick these stocks, but I'm trying to go some scenarios and you'll see what I'm talking about. Okay, so Tesla, it's like a textbook stock, but I'm going to give you some stocks and give you some of my examples, that actually some losses that I had, and I'll show you what I did and how I manage those stocks. One thing that for me, I do actually buy breakout. Okay, most of the time I'll buy breakout or I'll buy cheat sheet. So so what I really urge you to do, if you just started trading, man, every time you look at a stock, and I'll keep saying it over and over, look at the stock. First thing you look, if this is like a daily, man, look at the stock on the weekly, and it will give you an idea on what's happening. That's the first thing. You plug that on the weekly, and then one thing I would urge you to do, I mean, if you're not familiar with 4 stages of the market, man. You need to have, this is like a foundation, man. You need to know this like by heart. So you have accumulation phase. So this is your first base. So, and then this is your breakout. Usually I will get in right in there, and then this is a retest. So your first base, which is the accumulation phase, is the first stage. And then when the stock break out of that accumulation, this is where the meat and potato, this is where you make your money. And then actually this could be like 100%, it could be 200%, it could be, sometimes the stock like will give you like 10%. I'll come right back. I'll show you an example in a minute. Anyway, first stage, second stage, and third stage, when the stock just stopped making all-time high, it will actually, sometimes here it will make, this is like a textbook where sometimes you'll see the stock making lower highs in here, and then it will start breaking. Here in this example it's 200 moving average, but it will start breaking the 50 before even it will start violating the 50 moving average. So, and then you have the fourth stage where the stock actually starting to break down. So this is like a foundation. You pull a stock, any chart on the weekly, your eyes actually supposed to pick up these stages. All right, let's jump in right in Tesla. We had the stock based here. So this is your first buying point as far as I'm concerned. Okay, let's jump into the selling point. And I said, once the stock actually violates, this could be like an option. I'm giving you a lot of options and you pick and choose whatever you want. Once the stock actually violates, let's say actually we did bought here, right? Once the stock started violating, we bought here. Let's say stock started, as soon as it started violating and closing actually below that 8 moving average, you sell half or you sell 1/3. It's starting to violate and close below that second, which is the 21 moving exponential moving average. You can do 20 exponentially, you can do 20 moving average. It really doesn't matter. Once you start closing below that green line, the 21 moving average, you sell the other half, and then you let the other last part run, and then let it run and see how far it can go. Same way we're looking at the chart on weekly. You can apply this on a 5-minute, you can apply it on a daily, you can apply it on monthly. It's up to you. So you define. I don't know you. I don't know your style, so you're gonna decide, and you have to put in the work. That means you have to look at charts and you have to notice what happens once the stock's starting to close below the 21. What happened? I put in a lot of work, and it's not easy. I mean, if I show you, you will probably understand, but it's not going to be easy for you in the beginning. So you have to put in the work. You have to look at charts. You have go to Google, type in best stocks actually of the, like here. I went and I was going to give you some examples, and I picked some examples here. Look for the best stocks like in 2010 or whatever, 2020, 2018, and watch and plug the chart. Actually, plug those names on a weekly, and then see and try to identify the stages that we talked about, and that's going to be really super helpful. Try to identify support and resistance. Try to identify where the stock's starting, the first stage, second stage, and third stage, and then the fourth stage. It's not going to be perfect all the time, but like Tesla, it was like a perfect example. So like I said, that simple moving, those moving average will get you out of the equation, and then it will simplify things for you. So in here, so I put in 3 scenarios for you. So first scenario, like we said, it was Tesla, for example. So stock starting to break, and it did actually, it goes the way it's supposed to do. So here you can watch a stock. So if we look at it, so this is like a first stage right in here. This is like a accumulation, and then this is like the meat and potato right in here. This is stage 2. If we keep going, actually, this is like all of it, and you can see all of it right here. This is stage 2, and then the stock, you would think this is stage 3, but it could, and it started doing that because this could have been stage 4. But actually, don't predict, just react, and let the stock tell you, let that candlestick complete, and then you decide after that. Okay, and then be unbiased the whole time. And then for me, if you're not watching what the stock is, like for example, if I know all of this, I'll tell you the stock is in stage 4, this is stage 3, we're done, and then we're gonna keep going down lower and lower and lower. But actually, so I would have been probably bearish in here, but a couple of weeks later, I'll tell you, no, the stock is not in stage 4. So you have to be unbiased. If you have, and this took me actually a while, and I lost a lot of money just actually being biased, and then so just react on what the stock is doing, and then go from there. You don't have to predict anything. So we have base stage 2, and then we consolidated for a while. So what do you say to yourself? Okay, you go like, okay, so stock starting to break down here, but actually it's not doing that. So you go like, okay, so if you started breaking out above this resistance, that's bullish, but if it started breaking below here, that's going to be bearish again. And you can move probably you can move that support right in here, and then you go from there. And then we have a buying point. So this actually could be a buying point. This could actually be a loss right in here. The stock came right back down. Let's say if I put a stop loss here, and then and I got out, and I will say, okay, if the stock goes right back up here and broke above there, I'll buy it. And then eventually that's actually what happened. So you buy stock again here, and then you put your stop loss either here. So you can put it wherever you want. Personally, I like not more than 5% or 7%. That's my max. Anyway, you buy the stock here, and then again you watch those moving averages. It started violating that. In here, you take profit. If you did actually, let me show you something. If you did actually bought William O'Neill's book, How to Make Money in Stock, which is this book right in here, I urge you to read it, and then William O'Neill talks about that when they did actually study the market, they found that stocks actually, when they break out, most of them 80% out of 20. So it's like an 80-20 rule. Most of the time the stock will move between 10 and 25%, and it will digest. So you have a breakout in here, the stock will retest sometimes, or it doesn't matter if it's going to retest or not, it will go up. That percentage, you will go sometimes between 10 and 20. That's why sometimes me personally, I will take profit. I will take the first half profit when it reaches between 10 and 20%. And then if it has any strength in it, it will consolidate like what Tesla did, and then it will keep going. So for me, I will take that first half out in here, so I'll take profit. Once you take profit, you're good. With your mind and ego, like you're done. You put your money. If the stock comes back here, if it hits my buying point again, I'm out. And then you let the other half run. It's that simple here. So the stock from that breakout point, it ran for about 32%. You should have been taking some profit already. You took some profit. It still didn't barely violate this 21, so you still have another half, or probably two-thirds if you divide your position in 3. And then you just keep going. That's it. No, you just watch. I mean, you see the stock here, actually, it went through that slice, the 21, but it never closed. So another thing, you don't want to wait for the close. It tried, and it did here, right in here, it did close. So you can sell first half here when it violates the 8 moving average, and then this is your second time when it violates it. So you take the other half, or if you have 2 positions, you can sell it so you'll be holding that last part, because we said that as soon as it started breaking and closing below the 50 moving average, you get out. And that's exactly what happened. You average all those 2 halves or 3/3, you'll make money. And then you follow the stock, you keep following it. So what's the stock was doing back here? I think my chart just froze on me. I'm sorry about that. Anyway, you watch the stock. If it starts to break out again, you buy the stock again. If it starts to break down again, you get out, and then you're gonna sell your last half. Oh, I'm sorry, the stock just broke. Anyway, here we go. And then you'll see that here, you will think that Tesla again, it will fake you, and then you can get out, and then you just wait. So if you want to short, you can short. It's up to you. But anyway, if you notice here, we had this actually was resistance right in here, and it did actually become support. Once it started cracking that support, and it went down for how much? It went 23%. Anyway, I'm just showing you a selling rules. And then here, it reversed actually right back up here. And then it broke out right in here. And believe me, like once you look at the stock, once you look at many stocks and you trade, you will develop your own rules, because sometimes you will sell even before it even breaks this, violates one of these moving averages. Why I said that? Stocks usually, if they're healthy, they tend to go in a 45-degree angle. Once you start going up like that, that's not a good sign. That means they can really plummet. And then if you haven't taken your profit in here, you will go from a good winning trade to a loser. You can see the stock here went up from here all the way to up here. That's 123%. you better take some profit when it goes all the way up here. Because look, it took 1, 2, 3, almost 3 weeks in 1 week. All those gains came down. If you kept waiting, and you said, oh, it's gonna come back down. Look, it went down from the top all the way here, all down. That's like 45%. So you need to have a selling rules, okay? So I think you got my my point. Another buying point right in here. So if we flip that on the daily, so we're talking about daily. I can talk about it in another video about buying point, but anyway, that's my first scenario. I don't want to keep talking about Tesla the whole time. The second scenario is when you stock, if it's going sideways like that and it broke out, consolidated, it didn't go as far, and then it just came right, took you out, and then it reversed right back up. And that happens. It happened to me so many times. So the example that I want to give you is XOM, and that happened to me actually back here. Right in here, actually, I bought it right in that day, right in this day, right in here. So let me show it to you. And then the stock just didn't do much in 2 days, and I had my stop loss like right below that candlestick, and it took me out. But guess what? I kept that stock on my watch list, and as soon as actually it did clear the previous buying point, right in here, that was like my second buying point. So I did lost. I would say like what? So for me, I lost about 4%, a little 4%. But guess what? When I bought it right back up here to the top, I took some profit. That's 11%. So I just covered my previous loss. Okay. And then I followed it. I did exact same rules that I just told you as far as selling. And then sometimes the stock, like in here, it didn't give me a chance. It didn't even close below the 8 moving average. It just came right down, and then it closed below that 20 more average. So what I did, I put a stop loss actually, because sometimes what stocks will do, again, this would happen with experience. So what I did, I put my stop loss right below that the low of that candle, which is this one right here. And that stock, because sometimes what happened, they will close below, they will get a lot of weekend out, and then they will reverse the stock back up. So what I did, I put my stop loss right below the low of that candle, and eventually it did close. So and I sold it at even on my second half. So I did some profit, and then the other half. So I ended up, it was a winning trade. Anyway, same thing again. I want to give you example. Same example, STNG. This is another example that I bought it back here. We have a pivot. You can see it right in here. So I bought it here. Stock didn't do much. So I kept an eye on it. I was watching these two candles here because usually what happened is when you buy a stock, you want it to move up. So you hire somebody to do a job for you. You want them to do a job. You don't want them to slack or not do the job, or otherwise you're gonna fire them. So you do. So that's an analogy for the stock. You bought a stock, so you want it to move. If it goes, this is again with experience, if it keeps going sideways and starting to close below that 8 moving average, as far as I'm concerned, I will take half of the position as a risk management. I'm not going to wait for it to hit my stop loss, okay? Anyway, what happened is I bought it here. It kept going sideways, and then I think it took me out. Yeah, I did actually starting to take I did it went up, so I took half of the position, and then it took me I said it closed below that candle, it won't be no good, and I took my other half like right in here, so right below that green candle. So it took me out, so I got out, and the stock was not ready. So when I took the other half, the stock, I kept watching it, and look what happened right now. Stock starting to break out on a decent volume. So anyway, and then you want to watch always, like I said, I said this in my previous video, look at the left. Oh, what happened here? Look at the left. Put the stock on weekly, and you will see that the stock had a previous support here, and then if I was in it right now, I would take some profit right with that all-time high is. Anyway, so that's scenario 2. Okay. Stock goes up, it goes sideways. Sometimes I'll take, like I said, I'll take half of the position out. If it took me out, I'll get out, and if it comes right back up, I'll get right back in. The last scenario is sometimes you get into a stock at a perfect buying point, and then it will give you an average. I don't know. It could be 5%, it could be 20%, and then you still haven't taken a profit since you don't have no selling rules, and then it will gap in a day or two, and it will just kick you out. And then I used to get, and that happened to me. Trust me, I made all kind of mistakes. An example that stock that I'll give you is Zim, ZIM. Stock Zim is one of the winners actually back in 2020. So the stock had a really good move all the way here, and then you can see it here when it hits that all-time high here, and then it hits it back here, and then you would think that it's a good buying point. Here, that's a good buying point right there, but the stock just went sideways right in here, and then you can claim a loss right in here. As soon as it started to barely close below that, I'll just be careful, okay? I'll just be careful, and then it will take you out. For example, you claim your loss and you move on, nothing happened. Losses are expected. You're not gonna win on every single trade. The problem is how much you lost. If you keep losing 20%, 30%, you're not gonna, trust me, you're not gonna make it. You're not gonna make it. So again, let's say you got in that day, good decent entry right in here, and you had a move that's 16%. Stock actually did move 16%. You did not take any profit. Sometimes, like I said, I don't have to wait for the stock to close below the 8 moving average. I will take profit as soon as I'll hit between 10 and 25%. I know sometimes I'll pay attention. Sometimes we will have a reversal candlesticks, and I'll take a profit as soon as it starting to. I mean, not even close below it. As soon as if it touch it, I'll get out. We're talking about we're not even closing below the 8. So with experience, you will develop other tools. I'm just giving you the foundation. So let's say you got into the stock moved 18% or 20%. In this case, it moved like about from the let's say you bought it here, and then you moved about 16%. You didn't take no profit, and then next day you open your stock and you are in the red. So that happened to me. That happened to me before. So what I would urge you, before even closing below the 8 moving average, if it does move, if you have money on the table, take some. And if you have one of these days, this could be earning. I don't know what happened here. It could be earning. If let's say you took some profit and you were good, and then next thing it opened, then it gapped right down. This guy actually could have been because this is actually close to your buying point. Let's say. You could have like what 3%, but again, you took the first half. You took about 11, so 15, 16%. All right, or you can take. Sometimes if it's too hard for you, you can take profit. As soon as you start going above 5%, you can actually put your stop loss of the first half. If you want to take a profit, we're talking about taking profit. You can take it below each candle. So let's say it moved from here to here, and that's like 4.5%. You don't want to lose that. You follow each candlestick, and then the low of that candlestick will be your first tick in half of that position. That means in here the stock moved from here to here of that low. That's about 11%. You can put a stop loss, not a stop loss. That means like a first half of your position, like 50 shares. Let's say you have a total of 100, and you want to sell your first 50 shares right at the low of that candlestick, and the next day actually this stock with this wick, it went below that low. This is like a 85.77. This is an 85.10. This candle should have taken your first 50 shares out, and you would have claimed ching your profit, and then you will be good. And then in here you close the trade, and then you're happy, and then you move on. These are just like one of 3 scenarios that can happen. There's other scenarios that happen, but I did hope that I got most of them, because I wanted to share with you like the most main ones that happen. Because usually you buy a stock and it goes in your favor, like Tesla. Sometimes you just move sideways and it will take you out. Claim your loss. If you have a 5% stop loss in first one, 5% again, 5%. Those are all losses. And then you came in with one trade, and then you made 20%. Man, you just made all these losses, and you still end up with still 5% win. So this is like holy grail of trading. It's not about catching this is not a home run 100% and all that. It's not. Trust me. You have to keep sticking and stay disciplined on those 5 or 7% losses and try to manage it. And sometimes, like I said, if the stock just break out like in here in this scenario right in here, if the stock, if you don't see it like right in that area, if its stock's not acting right, starting to close 2 days, 1 day below that 8 moving average, 6 months moving average, take some out before you even, don't wait for it to hit your stop loss. And then if it goes right back up, then you add the other half. I mean, again, you're gonna develop this tools like along the way once you put in the work. And the last scenario, like I said before, is when the stock goes up green and you're happy, you're you're in la la land, and then next thing you know, one day you took all those weeks out. That's why you want to take a profit before it even violates one of these moving averages. Okay, I hope this video gave you value. I hope I wasn't too long. If you found any value in this video, please smash that like button, give me a thumbs up and subscribe, and I hope I'll see you soon. If you have any comment, you want me to cover anything, I'll try to do a playlist so I can cover the buying point next time or anything else. So help me with ideas. Okay, all right, thank you so much. Take care. Bye bye.